After 15 years, the Nasdaq stock index is back above 5,000. For the first time since the tech bubble burst in March of 2000, sending stocks into a severe bear market that lasted for around 2.5 years. But many analysts say things are quite different this time. Instead of dot-com internet company stocks that had no real earnings, this time the Nasdaq is being driven by solid tech companies like Apple and others, along with healthcare. And with us now for more on the stock market is our CBN News financial editor, Drew Parkhill. Welcome, Drew.
Yes, Mark. Hello.
Thank you for your time today. Would you say this compares to the last time the Nasdaq was at 5,000?
It's very different this time. First of all, and we have a graphic to show you this, Mark, adjusted for inflation, the Nasdaq is not nearly as high as it was back then. Right now, in order to be as high as it was back then, the Nasdaq would have to be almost 2,000 points higher at 6,900. So adjusted for inflation, it still has a long ways to go in the inflation we've had from 2000 to now. So it's a very different thing. It's not really an all-time record high yet. It's not close to that.
Is this another bubble like it was in 2000?
No. Back then, as you referred to earlier, I mean, people were coming up with all kinds of things. People are just investors are throwing money at everything related to the internet. If you just took almost any name, put .com in back of it, you could go public and make a bunch of money, and the stock would go up because nobody knew what was real, what was not. Companies weren't pulling in real earnings, and they were saying, well, in the future, when the internet's bigger, we're going to do well. Well, a lot of those companies went bust, and you had a lot of problems going on in the technology sector. And eventually the whole thing just fell apart, and we had that bear market, as you mentioned. So this is very different this time, no.
Drew, the economy doesn't seem to be that strong, so why are stocks going up?
Well, that's the key difference, because back then the economy was tipping over into a recession, Mark. Now it's not. I mean, the economy is slow. It's weak. A lot of policies from Washington have not helped things. They've kind of put a lead weight on the economy, so to speak. And there are a lot of other issues going along as well. But nonetheless, businesses are smart. They know how to make money. So businesses are still bringing in earnings, and that's what's causing stock prices to go up. As long as businesses are profitable, they're doing well. In many cases, they're expanding and they're hiring. Their stock prices are going to keep going up. This actually has been a fairly slow bull market. It's taken a long time to get from where we were to where we are. It hasn't gone up super fast like many bull markets in the past. Nonetheless, though, the economy is solid, so this is not a bubble. This is not like 2000 at all. Stock prices were way out of line back then. It was very obvious. You could even see it at the time. People were being warned, you know, this is out of hand. Now it's very different.
Well, let's look ahead. What does the future look like for stocks, Drew?
I think because the economy is solid, not great, but, you know, chugging along at a slower than average pace, the stock market's going to continue to keep going up over time. I expect there will be hills and valleys, peaks and valleys, maybe I could say, where we're going to have some real corrections. They're going to be shocking. Right now, we haven't had any for a while. They will come. You can bet on it. But I don't see a genuinely severe bear market for some time yet. I mean, there probably will be one. It's inevitable, actually. But from right now, for the foreseeable future, stocks are going to keep doing pretty well. It's going to take a while. The S&P 500 is at its inflation-adjusted all-time high right now. The Dow is above it, so it's going to take a little while to get through all this. But eventually, over time, over the longer term, definitely stocks are going to keep going up.
Okay. Our CBN News financial editor, Drew Parkhill. Thanks for your time, Drew.
Thank you, Mark.
And your insights. Thanks for breaking it down.
Yes, sir.